band indicates about 20,000 to 20,500 crore rupees of valuation of the company as per your IPO issue valuation. What are the matrices based on which you have derived at this particular valuation, and is there enough on the table for the shareholders who put their money and bet on your company?
Especially with respect to the valuation, clearly the overall asset mix that we have as an AMC compared to the competitive competing fund house in the country, and also the AMC that are in the listed space, and then look at actually the profit that is being generated vis-a-vis the other companies and the overall AEM mix between equity and fixed income, and also the profitable high margin asset that we have. Another large pool of customer base that we have built over a period of time. After applying for all these into account, and also finally the price that has been arrived at, again taking into account what is the kind of right pricing that we should do, irrespective of whatever the valuation the market will give post listing. And since there is a benchmark that is available, what is the kind of discount that one should apply to the existing listed space in order to ensure that the investors who come on board at this point of time, the price actually they're finding it, I think it's actually offered at a reasonable price to the investors who come on board. And that's time I think the broad thought process we have, one, looking at our own strength and looking at the competitive already the listed companies in the market space, and what should be the benchmark that one should apply on the basis of that, and also taking into account the future profitability growth that we have in mind. But of course, they're all projections at the end of the day. Keeping all this in mind, that pricing that you have mentioned about is something has been done in the best interest of investors who would be of course coming into our shareholders list, the post listing, and that's a broad thought process that has gone behind the pricing that we have done.
One key aspect that a lot of analysts talk about is also the equity mix component as per percentage of your overall AUM. That stands a little under 40% at the moment, while equity markets are really booming right now. What is the trajectory there, and is there growth prospect expected from there?
I think clearly if you look at our past trend, Nisha, just about 2016, we were about 24% of our total assets and management coming from equity. The last almost 6 years, we have grown from 25% to about 38%. As it stands today, 38% of our total assets come from equity. And our overall commitment actually to build our equity to large size that remains even going forward, given the fact that if you look at any customer in the country, would have an average about 40 to 45% in equity, and rest of the component will come in the fixed income related schemes, given the fact that every customer has to be well positioned from the portfolio allocation point of view. Keeping that in the broad theme as mind, our endeavor actually would be continue to drive our equity growth on one side, given the fact that equity actually helps in creating a wealth. But in fact, we as a fund house actually categorize all funds in a 4 category. One is a fund that actually serves for saving needs, second for income needs, and third for wealth creation need, and fourth for the taxation needs. In this category, in each of the funds, I think we pay attention the best in the investors. And we believe at the end of the day, a portfolio construction is more important, on the basis of which even our asset mix that we have built also have been built on the same lines, and both in terms of building a size in high margin assets like equity, and also offer a fixed income solution to the customers is also equally important, and that's something we remain focused on both the asset class.
I want to understand the profit matrices and the cost to income ratio. Take us through that trajectory as well.
I think clearly, Nisha, I think our cost to income ratio in the last few years have been coming down, given the fact that scale benefit is finally accruing in terms of increasing the revenue on one side. Our equity mix between fixed income and equity have been more moving towards equity with about 38%, as I mentioned earlier, from 24-38%. Therefore, that improves the overall revenue model. Even the fixed income, we have many products which are high margin assets, wherein it provides a greater solution to the customer that also improves the overall revenue. I think scale benefit, the operating leverage that we get has been helping to reduce the cost income ratio. In fact, our cost income for the quarter ending June 2021 has dropped from 19 basis points to about 16 basis points. That's something I think we have as a fund house very clear about improving the overall cost income ratio, taking into account the benefit that we can get on scale, operating leverage, at the same time keep the cost under control.
Right. And what about the offshore as well as the geographical footprint in terms of your operations?
I think the one area where we look at improving the overall the product offering in the country, not just sticking to only the mutual fund product. We actually have been developing our own presence in offshore business. In fact, we are the only AMC have got presence in overseas market in Singapore and Dubai for the last almost 20 years, and continue to remain committed, even looking at opportunities that could arise by going to the GIFT City very soon. Also something we are evaluating to offer product for the overseas investors who are investing in India by providing advisory services. In fact, we have been managing some of the pension funds or sovereign funds for global investors for the last 20 years. So that remains as part of our growth driver. In addition to that, this year we have gone about building a separate team of people to drive PMS, to drive AIF, to also drive real estate fund offering and the alternate product offering, which will one help us in reaching out to more number of customer base, especially the HNI and family office category, including pension funds. That something will help us, given our strength that we have an investment management capability, offer the service to those kind of customers and help the builder size at the same time looking at building our overall future profitability contribution coming from this segment as we move forward.
All right. And also, Bala, I wanted to understand that this particular IPO is a complete OFS. Your two investors and the promoter is selling only 1% stake, AB Capital, while the Canadian financial services firm Sun Life is selling down 12.5% stake by way of this IPO from the current 49% stake. What is the mindset and strategy of Sun Life going forward for the listed company ABSL AMC going forward? Is it a path to exit or is it more of return making?
I think clearly among both the shareholders, definitely IPO Group is the domestic very strong brand, and Sun Life of course the global brand. And both the partners, and given the fact they have also understood that having the AMC in the listed space, definitely it can reward both the employees, as well as it can give a currency for the shareholders to look at any opportunity that could come on the way. At the same time, given the fact the regulatory framework suggests 20% has to be the free float, somebody of course divest. That's why Sun Life actually chosen to divest about 12.5%, and IPO Capital have chosen to divest about 1%. And over a period of next 3 years, the balance of 12.5% will also get divested in order to have 20% is the free float in the market. At the same time, the way I think shareholder agreement exists today, and the shareholder agreement remains at whatever was there at 51 to 49%, and Sun Life commitment to Asia and India especially is extremely high, given the fact that not only have exposure to AMC business, they also have exposure to the life insurance business, and which is one of our arm. Therefore, they are deeply committed to India. I would assume that overall commitment that they have for the Asia and India will continue to help the AMC business to go to the next level with the commitment of both the shareholders.
Bala, there are two things developing in your space very fast. First, the digital thrust and many new age companies are coming in terms of giving competition to the legacy companies in the space. And the second also is that many mutual fund assets are up for sale. So will M&A be a strategy going forward for group?
What you're saying is right, Nicha, especially the competitive landscape is changing, absolutely no doubt. I think we as a fund house have always remained agile to cope up with the trend that is emerging by way of making our own AMC as part of the same digital space as strong as any new players comes in. That's something is the first and foremost motto that we have. Sometimes we do believe that we need to become younger while we are old in the industry. We need to become younger by offering digital-based solutions along with some other competition that is coming in the space. That remains and also goes without any saying. With respect to the any M&A opportunities, though I cannot talk about the future, I can only talk about the past that we have done. Then we are one of the fund houses have got a great track record of consolidating the mutual fund industry in the past by buying out assets and management of Apple, Alliance Mutual Fund way back in 2004, ING Mutual Fund in 2010 when we were moving out of the country. While we have the past track record, but any such decision in the future would again depending upon the shareholders' approval or depending upon the opportunity that arises. Need not necessarily the opportunity has to come only in the mutual fund space. It can come even in the alternate space as well. But are we open for that? Yes, but all will be subject to various opportunities that exist at that point of time. As long as it actually is going to add value to the shareholders in general, then probably will remain somewhat open to that.
Right. The alternate space that you mentioned, what are those avenues that you may not explore going forward?
I think alternate space clearly, the one of the area, I think more than what we will not explore, Probably I would say we'll explore more opportunities in the alternate space. We have recently renewed our focus on offering real estate fund offering with a fixed income orientation mindset in that. Second, we also been looking at opportunities offering ETF, which are other than gold is silver ETF. We're also looking at opportunities where we can help investors from India to invest overseas by creating a feeder fund in the NASDAQ and other overseas funds. Probably I would say instead of having a negative list, probably would say look at more opportunities that we can give a variety of product to the growing needs of the domestic individual customers within India space. And that's the broad thing that we have, Anisha.
All right, Bala, always a pleasure speaking to you, and many congratulations on this big move, and all the best for the success of the IPO of the company. Thanks so much.
Thank you. Thank you.